Hey DV, how you doing? Yeah, I'm not going to be on for too long. I've turned my fan and stuff off because otherwise you're going to hear my Dyson blowing in the background. And it's hot. Day was okay. It was pretty decent. Didn't trade. Didn't have any setup to be. Well, I wasn't on the charts today, to be fair. I was. Hey Joe. I was out. I had my kids' sports day today, so I was away. Out today. Hay fever, it just comes and goes. You know how it is. I was alright during the day, and now it's kind of playing up again. Hope everyone's well. Right, let's have a look at some charts from the weekly watch list. So AUDCHF. So first of all, dollar. Interesting news. It was kind of as expected, really. Inflation came down. It came in below expected. Just gonna bring up the news actually. Now the only thing that was a bit of a mixed bag, where it wasn't like full pelt dollar crashing massively, was the fact that core CPI is pretty stubborn still. You know, forecast was 0.3. Sorry, 0.4, and it came in at 0.4. So it's not really it's not really going down if you look at the previous history. And core CPI is what affects the consumer. You know, it's what they pay, it's what we pay at the counter. So that's still pretty sticky. Overall CPI, you can see CPI year on year is coming down. CPI month on month is coming down. So the numbers are probably relatively well placed for the dollar to for the Fed to pause. I think that's there in the forecast, so I don't really think that's going to make much of a difference. I think that's already priced into DXY. I think the dollar is expected. I think the Fed is expected to pause, so the market has already priced that in. I think what is going to be interesting is going to be the fact when Jerome Powell actually speaks, what his language is going to be like. You know, is he going to say that if he comes on and says, you know, inflation is coming down, things are pretty well, obviously unemployment is starting to see some weakness as well, so what they're trying to achieve, it's working, and we'll just review the data, then I think that can just be more bearish sentiment for the dollar. But I think what the market is potentially waiting for to see is if he comes out and says, yep, you know, inflation is coming down, but core inflation is still pretty sticky. The jobs, even though unemployment has ticked up, but the jobs market is still pretty strong. You know, we're not saying we're completely done rate hiking yet. We're pausing for this month, but we'll see what the data looks like next month. If he gives any kind of dovish, bullish sentiment that they still have rate hikes potentially in their back pocket for future increases, then I think the market will take that as a bullish sentiment. I think all the numbers currently coming in will allow them to pause for this month, and the market already expects that. But I think it's the future projections. The markets always work on future projections, and I think that's going to be the key element. So I don't think the actual drop of the news for FOMC, the actual interest rate, is going to really do much. I think it's going to come in as expected, unless if for example they do a 25 basis point rate hike, you could see the dollar pretty much through the roof. I think the dollar will rally pretty big time, but the overall sentiment and the expectation is that price is going to come in, the interest rate is going to come in as a pause. It's going to be 5.25%. The key is going to be wait to hear his language and what he says during the press conference. Any kind of dovish sentiment where he's kind of hinting that we've reached the peak of our rate cycle, and typically a pause will eventually lead on to a reversal. So they'll start to unwind rate hikes and actually start to go the opposite direction. So the wording is going to be super important in what he says tomorrow. So don't be crazy expecting there to be some crazy moves. Yes, if there is a 25 basis point rate hike, then expect the market to kind of push off to the upside. Khalid, if you just rewind back slightly, I just explained what my thought process is on DXY. But looking at the dollar, look at it from a wider perspective, as we've already discussed. This is a weekly chart. So if we zoom this out and we actually look at the dollar, what's the dollar done? We had a lower low, lower high, lower low, lower high. Now, I'm not for any second saying, oh, we're going to create a new low here, but the pattern is bearish. Higher low, lower high, lower high, lower low, lower low. That from a extremely high time frame tells us that it's very easy. People get overly caught up in this area of price action and just be like, the dollar's bullish. Yes, we had this huge rally, but this rally was because the Fed was ahead of the curve in comparison to every other central bank. When it comes to raising interest rates, every other central bank was very slow. So that's why we've seen this huge strength in the dollar. And even from a technical perspective, we look at the internal structure. We had a breaker structure here. What were we expecting? We were going to get a pullback, and that's what's happening right now. So, from a longer term perspective, as I previously said, we could most probably see the dollar continuing to come down to like 96. The question will be, if we get a rate hike, or if we get some further bullish sentiment, we could see the dollar retrace and then come down. But longer term, nothing is 100%, but the likelihood is the price is heading in this direction. So it'll be interesting to see what that kind of looks like. Now, the only thing I would say is go back to the weekly. From a technical perspective, price came into this area of demand. We kind of came to the base of it, and then we started to push off, but we are still bearish. We've not broken any kind of swing structure to the top side. You can see we had a huge move down, we had a pullback, we failed to break the low, and then we started to do this, but we reacted from this level of supply, and then we started to somewhat consolidate. So like I said, it'll be interesting to see what the Fed say tomorrow. That will have a big implication of where the dollar goes. And before the Fed, if we get an unexpected rate hike, they could be thinking, as we're on a rate hike cycle, we're probably looking for one more within the next couple of months. Let's just get that out of the way now and then pause. So we don't know, but I think with the inflation data coming in today, that should give them some room, further projections for them to be pausing. And if it's a pause, that's weakness for the dollar. And like I've already discussed, you look at the weekly chart, you look at the monthly chart. You know, let's go on to the monthly chart here. Same thing again. You know, you look at this. We created a new low. We had a pullback. We created a new low. So once we created a new low, we're not really concerned about this high, because we created a low, lower high, lower low. Then you can perfectly see price fulfilled its pullback and it's heading towards this direction. So from a higher time frame perspective, price is bearish as well. Yeah, I can give you my Fibonacci settings. Now, I personally, me personally, I just hide the numbers. You can, you know, you can have them there if you want. So I just work off of the 0. My key zone is the 70 to 79%. That's the area that I kind of look at. So feel free here. I don't have the trend line. Everything is unchecked. I have 0, 0.7, 0.79, and the 1, 80, and below that, everything else is unchecked. Now, sometimes, you know, I just bring up the 50% just to see a valid retracement, but broadly, I kind of know that now without having to bring it up. So typically, it's the 0, 70, 79. And 1 is what I have on my Fibonacci. So that's my view on the dollar. Guys, I've turned my fan on in my room. Let me know if it's too noisy. Joe, you said CAD CHF and GU. All good, yeah? Right, I've turned my other fan off and just got my table fan on. It's just so hot. Right, so CAD CHF. I'll cover GU, Ty. So as I had said for CAD CHF, so we had an area of supply here, which you can see price tapped into just about, and we have an extreme area of supply here. We also have an area of supply over here. You know, we have this supply, we have this area of supply that price is tapped into. So if we go down to the lower time frame, we can see price was creating higher highs and higher lows. Then we had a higher high, higher low, higher high, and then we had a change of character here. Now, when price came back into this region up over here, you can see we had a lower time frame supply here where price reacted from. We had this area of supply here where price was kind of consolidating sideways as it came into this region, and then we kind of pushed off to the downside here. Now, if you look at it from a higher time frame perspective, you can see we had this area of demand here where price tapped into and then started to push up to the top side, but price never mitigated the higher time frame supply which sat up over here. So for me, looking at this, when we did this, because you could see from this point we have this huge expansion to the top side here. You know, if we did something like this, if we had a higher high, higher low, and then we did this, then we could expect price to come back and continue pushing down. But we didn't do that. We just had this huge expansion from this point here to this high here. So all this was a retracement and a reaction off of that. Now this was an area of liquidity then built up. So if we go back to the higher time frame chart, supply zone, you could see we had supply sitting at this extreme. So when we pulled back here, that was a reaction of the 15-minute supply, but we never broke any structure to the downside, and then price pushed higher to mitigate this area of supply. So, you know, there could have been two things here. There could have been an entry aggressively from this area here to see, once you see rejection, to start trading this down, or you want to see price had this pullback and this new high, and you see this shift and you kind of start trading that back down. So, you know, there's a couple of things in how you can kind of trade that. Or from a lower time frame perspective, as price came back into this region, we created a higher high, higher low. We kind of had this big push up. Now again, this was just a reaction off of this pullback, and then price kind of came back to the top side. So lower time frame hasn't shifted here, but we know this is the extreme area of supply. So as price pulls back into this region, preemptively could have looked at taking a trade potential here, covering the highs, and then start to trade this back to the downside, because now we've swept the liquidity above this and we've reacted from that extreme area of supply at the top, and then we're starting to push to the downside. So you want to cover the highs and then look to start trading this back to the downside. Even though on a 5-minute chart we could see in this pullback we did this, and then we just had this huge expansion and we had this pullback, so we've not really shifted. But this pullback, what we're expecting here is higher high, higher low, higher high, higher low, higher high. We've come into our point of interest, higher low, lower high, and we're preemptively selling into this because it aligns with higher time frame. Because a higher time frame already, we could see this is a daily area of supply at the top. Demand failed. We had a change of character over here because we had this pullback and then we had this new high. Change of character, retracement into this extreme. So when we tapped into it here, we created liquidity, mitigated a lower time frame supply, pulled back, came up, swept above this high. Now remember, you know, swing highs and swing lows, or internal highs and internal lows, will have liquidity resting above them and below them. So engineered liquidity, pulled back, mitigate this high time frame POI. So trading that on a lower time frame now, preemptively over here, expecting lower time frame change of character to happen is fine because it aligns with high time frame, our high time frame point of interest. So that's what I would have seen on CAD CHF. Obviously I'm not in it, but hopefully that makes some sense to you. Let's look at GU. I know a couple of people asked for GU. So GU, if we look at GU, now overall GU is pushing to the top side. I do expect GU to continue higher, at least until we get into like 1.3, 1.32 kind of regions in the coming weeks and months. Daily, we could see we had a nice daily breaker structure. Price started to enter a pullback here. Go down to that 4-hour time frame. You could see here we were creating lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low, and then we had a change of character, had a pullback, and then we started to shift off. Now, where is price likely to go? Point one is going to be to take out this weak high, because this weak high failed to break the previous low. Next, what do we have above that? We have an area of supply as the next key area that can cause a high time frame pullback. There was a change of character in the daily time frame. Yeah, and again, it really depends how you read market structure, you know, how you kind of see it. For me, the change of characters happened over here. And then price entered a pullback. All of this, we had lower lows, lower highs coming all the way down here on the daily chart, which was a break of the weekly low. Once we broke the weekly low, we then had a change of character to the top side because we entered a weekly pullback, and now we're in that retracement phase. So then we come down to the 4-hour time frame. What is price doing now? You know, we're now heading to the top side, but what do we have? You know, we had this impulsive push up, came all the way to this area of demand, and then we created this new high. Now the way I'm looking at this, we had our M15 breaker structure here. When we pulled back here, we never got a deep enough retracement. Let's see this. We were very close to equilibrium, but we never came into it. But what we also didn't do was we never mitigated areas of demand down over here that haven't yet been tapped into. Hey Masia. So the way I'm kind of seeing this now is this could act as an area of liquidity, and this is still our low that caused this big push up. So if that's our low point, and I mark my fib to the low to the current high, price could sweep this low and come back into here to mitigate an area of demand. Now, you know, it's not the cleanest price action as you kind of get down into these lows here. There's nothing fantastic or huge areas of imbalance even on the 4-hour chart. Price is pretty efficient, so it might not happen. What we might get is we might get a pullback into this demand and a continuation. So the way I'm kind of going to manage that is just on a lower time frame. If this low is going to be protected, then what can we see price doing? Just going to delete this. So there's that scenario here, but that scenario is only valid if lower time frame creates a downtrend coming down into here. If we see price reacting from this, we have a unmitigated area of demand that sits at 1.25400. Then if price comes down to here on a lower time frame, you know, say we do this, and then we shift from this point, I'll start looking for buyers from this region. You could see nice unmitigated area of demand aligns with that pullback. I'll then start looking for buyers from here. I'm not keen on shorting this at all because, you know, we had this high, we had a pullback, then we just had this huge expansion. So price could come all the way down into this area of demand and then continue higher. So we've not really created any lower time frame structure up over here for me to get short on this. But if we come down here, then and we shift, then there's potential buy opportunities. But if we don't shift at these lows here and we continue creating lower time frame structure, and we break below this, then I'll wait for price to head down into demand over here. I'm not overly confident with this demand at the bottom because it's not clean. I could see price wicked back into this region, so it's not a clean area of demand. You know, we could definitely just react off of these kind of regions here. You got low time frame there, which is definitely more appealing. But overall, I definitely do see price heading up to at least next stage before a deeper correction is like that 1.27400 region for pound USD. Now AU, so I kind of mentioned this before, we have this, so we got some equal highs roughly over here, so we have liquidity resting there. You could see here, I'm not going to start going over the extremely high time frame. I've kind of covered that multiple times before, so I'm not really going to go into that in too much detail at all. What I will say is the higher time frame, I'd said we're in a bullish move to the top side. You could see we had a breaker structure here to the downside. So now after that breaker structure, what can we expect? We can expect price to start pulling back, and that's what I'm expecting. So if I'm expecting price to pull back, you could see we have huge areas of imbalance and inefficiency above. So if I'm expecting price to pull back, then now we're creating a higher high, higher low, looking to do this. So what are we looking to do from a longer term perspective? We're looking to take out this weak high out, because this high failed to break the previous low. So if this is our weekly swing structure, within this we're going to have our daily. Now you can see where's our daily structure. You know, we create a lower low, lower high, lower low, lower high, lower low, equal high, lower low, lower high, lower low, lower high, and then we had this lower low, and then as we came up here we kind of created an equal high. But more importantly, going back to the weekly, where are we shifting from? We're shifting from a key area. We have daily demand just over here where price is tapped into, sorry, weekly demand. So now the pullback is complete at this point. Now we're expecting price to shift based on higher time frame. This is why it's important to have a clear understanding of multi-time frame, true multi-time frame analysis, which a lot of people don't, unfortunately. So if we're seeing that weekly pullback was complete here, and you can see price started to bounce off of that. Now we closed above this region, which was the last daily lower high, and that was the lower low. So once we closed above it, it was marginal, but we still closed above it. Then this was our daily pullback area. Now I have this area of demand down here, so what we've done is we've mitigated this daily area of demand. As you can see, all I did was I refined it down to a 4-hour, which sat further deeper within this area over here. As you can see, we have this area of imbalance and we have this area of demand here. Now in order for price to head back down towards here, if this is our daily swing structure to the downside, if this is our daily high, daily swing high, lower high, here's our daily swing low. Within this we have a 4-hour trend. Now you can see we had a lower low, lower high, lower low, lower high. We had this low, we had this pullback all the way here. So all of this was internal. We then created this low. So if, in order for price to continue bearish and mitigate this deeper zone in this weekly pullback, then price should not break above this 4-hour high, which caused this low to break and created this low. So we're in a pretty tricky area, and I would say what will determine this is tomorrow, is what the dollar does tomorrow. You know, so we are here. We could probably expect some pullbacks from this point leading into tomorrow. So as you can see, price is at the extreme. We are at this unmitigated area of supply, and from here you can see price is rejecting. Now from this point here, we were trending nicely here, and then as we came here, you could see that AU just rallied. You know, as we broke this, we just never had a retracement. We just never had a deep retracement. So all of these breaks here are all internal. Now, what we can see, what I'm potentially looking for is, from an intraday perspective, if we can see a break of this and some sort of pullback into some supply created, there could be some intraday shorts. But as it stands, in order for me to really get back on that bearish price action, expecting price to come down and take out this low and mitigate this area, I would need the most significant internal low, which is this, needs to be broken, because all of this price action, there's no real retracement that we've had here. As you can see, when price kind of came here, we did this and then we just did this. So we've not had a significant pullback. Price could come all the way back here and then shoot off, because there's our low, there's our high. Price could just pull back into an area of demand and continue pushing higher. So as it stands, I'm not going to be thinking about what's going to happen over here, because I do have a bearish bias on the dollar. But on an intraday basis, we are in higher time frame supply, and if we do see a pullback, we could clearly see we have some unmitigated areas of demand over here, and more importantly, within our fib area. So we could see price come all the way down back into 0.67000 before we see the next push up. So we could see over tomorrow, over Asian session tonight and London tomorrow, price just head back and then do this. So there could be some short opportunities back down into here. But overall, if price gets over here, we could expect price to continue higher. Now, why am I not expecting price? Why am I expecting it to continue higher than to continue lower? One, because of the dovish outlook on the dollar, and two, yes, I have this 4-hour zone marked, but more importantly, the daily demand has been mitigated. So price doesn't have to come down because I can see an area of imbalance. The pullback at this point is virtually complete if it wanted to be. We've tapped into that region, so now we could do this. We do not have to. Now, if price had not yet tapped into this region, then I would have more confidence. So when price was here, and we say we came down to a demand zone here, would I be looking to buy it? No, because I'm still expecting for that pullback to be complete. Once the pullback is done, price does not have to, I do not have the same confidence to expect price to come down here. The only time I'll be interested in that is if the 15-minute structure shifts bearish. Then I'll expect price to then I'll have more confidence to say the 4-hour pullback is complete, which is up in this region, and now we can expect price to come down and fill out this imbalance, take out this weak low, and mitigate at the extreme. Till that point, there is nothing coming down here, and this is why it's super important. I tell people all the time, don't just get lost in what's happening here. Have a much wider understanding of price action, because that's going to be super significant in your ability to truly understand what the market is really telling you and where you are trading and why you're trading there. If anyone has any pairs, feel free to drop them in the chat. There's 12 people here and only 8 likes. Come on, guys. And remember, we have our free Discord. If anyone's new here that hasn't joined, feel free to join that. So that's AUD USD. CAD CHF I've kind of covered. Euro CAD, I've covered my trade. I kind of went into this trade. I'm still expecting upside for Euro CAD. I'm not really gonna go into this too much. Gold. Let's look at gold. So gold is very interesting. High time frame, gold is still from an extremely high time frame, gold is still bullish. Now people are probably thinking gold bullish, like what are you talking about? And by high time frame, I mean like when you're going out on like weekly chart and you're looking at things from an extremely high time frame. Hey Mills. So if we look at gold, we had a huge rally, we had a pullback, we created a new high. Now once we create this new high, in this uptrend that we were having, the last pullback we had was over here, and then we had this huge expansion. So our higher low was here and our higher high was here. All of this price action was internal because nothing is broken above this high and nothing is closed below this low. So technically we are still bullish. Now again, here's our low, there is our high. I'm just going to delete this for a second just to clear my chart out. So you can see that there, price perfectly created this new high, pulled back into this weekly area of demand, and then started to rally off to the top side. So right now, what's price's first objective? It's to create a new high, to break above this, right? Now price has not done that yet, but if that's price's first objective, then what can we see? If this is our weekly push to the top side, within this we have some daily structure. We have a higher high, higher low, we have a higher high. So currently we can see we're in a daily pullback. Now do bear in mind we do have an area of demand sitting over here, but sometimes what price does is support and resistance does work. I don't trade support and resistance, but these things sometimes do work. We have this area of so-called resistance, as you can see over here. So we had resistance, 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 popped up, resistance turned into support. So we could see price, depending on what happens with the dollar tomorrow, gold to rally from that point. But as it stands right now, we are in a daily pullback. How do we know that? Because we had a daily breaker structure over here. We had a perfect 4-hour trend pushing to the top side. We then had a change of character over here on gold. And after this change of character, we can see price started to create. We had this low, we had a pullback, we then had a low, we then had a pullback, and then we start to consolidate sideways. So technically we're still in that daily pullback, nothing has shifted. If we go to the slightly lower time frame, just say the hourly chart, we could see we had this last high up over here that caused a breaker structure over here and created this new low. Now as price came up here, you could see we failed to close above this high. You know, it's pretty much equal. So because we failed to close above this high, we cannot expect when price came back over here, we couldn't expect price to start pushing off to the top side because price failed to take above the previous higher structure. So right now all we're doing is pretty much ranging on gold sideways. If anything, we are still bearish on gold because price failed to break above the previous high. Now if we had broken above this previous high cleanly, then what I would be expecting is price to continue higher. Now I'm not saying it can't, because it can, because we're also not breaking the lows, but what we are doing is we're creating liquidity within this region and kind of above this range here. So you got a range there and you got this kind of range here, but technically we are still bearish on gold. But what you also want to see, and these margins are huge, because how many people would probably have been thinking, oh, we've come high, we've created a new high because they're looking at something like this as a structural high, or something like this as a structural high, and then they're saying, right, okay, we have a demand zone or something, you know, price has come back into an area of demand, and I'm trading it to create a new high, and then look what eventually happens. Price is just still bearish. Why? Because high time frame has not shifted back to the top side yet. But what we do have is, if we see some bullish sentiment for gold, we have this area of demand that's yet unmitigated. So even though we are in a ranging market, extremely high time frame gold is bullish. Medium time frame, which is like your 4-hour chart, we are bearish because we're in a daily pullback. And on a intraday time frame, we're pretty much not bullish or bearish, we're just pretty sideways, as you can see. But what we do have is, like I said, if there's weakness that comes in for the dollar, we have this unmitigated area of demand here. As you can see, price has not yet tapped into this demand. Now, do I have huge confidence with this demand? Not really, because it didn't break above the previous high. But if price is going to shift bullish, it could do from this point, you know. So over tonight, we could see something like price coming back here to continue pushing down, and tomorrow during FOMC we could see price hovering around this region, and if news comes out, we could see price push off from here. So there's two things on gold. If you're looking to trade gold, what I would say is, from an intraday perspective, if price fails to mitigate this area of demand, then we currently have this range. So if we see price pulling back up into here, could see the next short coming back down into here, you know, because what did we have coming down? We had a low, we had a pullback, we had a low, we had a pullback here. Now this wick above was just a liquidity grab above these highs over here, nothing more, nothing less. You know, if we're looking at the 15-minute chart here, even though all this is internal structure, you could see price never broke above this. It never closed above this. This was the last high that caused this low to break and created this new low here. So when we came back up here, we failed to close above this region. So where we failed to close above it, what's that telling us? That we should be continuing down. So now that we've created another new low here, where's our high? This is our high, this is our low. So if we now get a retracement back here, what's the natural expectation? The natural expectation is prices to continue down here. So that could be an intraday move. Is it going to come all the way back up here? I don't know. Probably not. Price is pretty efficient up there. There's no imbalance, there's no inefficiency. We might not get price coming all the way back up there. We could see price just come up to this area, fill this inefficiency, and then sell off into here. Me personally, I'm not looking to trade gold now until we either, let me just go down to lower time frame. So now you can see, like on a lower time frame, you know, we're starting to create some structure. We had this retracement and we had a pull. You know, if we start to do this and then we shift, then I'll look for some buyers to the top side. If lower time frame shifts in this region, then I'll start to look for some buyers to the top side, because then that's telling me, right, okay, you know, price at least, but that's on an intraday basis. I would only look to trade price back up into something like these regions up here, because until we do not break above going back, it's easy just to show on the higher time frame. Until we do not break back above the last high that caused the breaker structure to the downside, there was the low, created this new low. Here's our bearish range. All of this is our pullback. So until we do not break above this high over here, gold is still bearish. There's nothing more to it. You know, what do we have? We do have some supply up over here that is unmitigated. So price could quite easily shift on a lower time frame, come all the way back up into here, sweep all of this liquidity and mitigate that supply, and then sell off. But we're still bearish because we've not broken above. We all know higher highs and higher lows. So if you understand that, you know price is still bearish if it's creating lower lows and lower highs. Simple as that. The difference is, do you understand which is the correct low, which is the correct high, and which is the one that broke structure, and how you perceive that? So as it stands, we're ranging. Now if tomorrow news comes in strong for the dollar and we break through this, then what's my expectation? Then my expectation is that the daily pullback continues, which is where am I expecting price to? Where is the next target on the daily? Is to fill out this inefficiency, and we could see gold at least coming back down to like 1840 before we see the next push up. You know, because remember, daily breaker structure, daily pullback to see the next daily push to the top side, which will align with price looking to break the previous weekly high. That's of significant value. Higher high, higher low, higher high. So that's my expectation on gold. If we break out of this, you know, looking at this 4-hour chart, if we break out of this here, then I'll just expect to pull back into an area of supply and then continue shorting. Then I'll forget about all of these areas of supply up here and liquidity here, because that will eventually get taken. But if we do break that, then we're continuing in this daily pullback, which is absolutely possible because we are in a daily pullback. So that's my view on gold. AUD USD M15 sell setup. Listen, if it, for me, there's no sell setup, but that's not to say it doesn't align with your rules or your plan. You know, this is a high time frame point of interest for price to sell off from. Is a bit of an aggressive entry. Like I said, I would personally prefer for price breaking this low here, but listen, if it works with your plan and it's set up that aligns with your rules, then absolutely 100% take it. Right guys, any other pairs anyone wants me to have a look at? I don't really fancy going over too much more. Feeling a bit rough. Remember guys, it's not about being right and predicting where the market's going to go. I don't care whether the market goes up or it goes down. I want to follow my rules and just move with the market, period. Because I'll make money if it goes up or if it comes down. Why do I have to have a bias of where it's going to go? I absolutely don't need to have a bias of where it's going to go. And it should be the same for you. Do not have an expectation of the market is going to go here and that is all I'm expecting and that is all I'm going to see. Oh sorry, Mills, you said AJ. I'll quickly have a look at AJ for you. So AJ, I think AJ is most probably going to be heading up nicely towards... Now again, this is just another scenario, guys, where you can see what's happened. I was expecting potentially to see AJ come at least down into this area of demand where price never tapped into. But you can see what price has done. You look at this from a weekly chart, what you can see here, you can see resistance, 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 support, 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 boom. Now again, I don't trade support resistance, but not saying that they don't work. So looking at that, you know, where is price heading? The next weekly area of supply is sitting up at like 102. So looking at that on the daily, we broke above on the daily. Now to the left, we don't really have any areas of supply until 97, 98. 4 hour, we are pretty overextended. You could see since this point we've just been rallying. So if we come across on the now we've had a daily break to the top side, can we expect a pullback? Yeah, we can. But there's nothing to the left sitting here that's telling me that price should react from this and push down. So AJ is really a pair. I'm not really interested in one bear, and I wouldn't be trading this, me personally. It's just on a tear to the top side. 4 hour, we are so bullish and so overextended. 15 minute, you know, until you don't see any kind of reasonable structure. You know, the last M15 breaker structure we had was here because we were trending pretty nicely. We had this high, we had a pullback, we then had a break, we had a pullback, we then had this break. After this, we've just not really even pulled back. So for me, looking at AJ, I wouldn't really be able to advise you anything. There's nothing there for me to really have a look at. All I would say is the safest trade is if and when price pulls back into 91,500, you could look to buy this. When and if that's going to happen, not sure. Right guys, well, I'm going to be off. We'll probably do something tomorrow during FOMC, and I'll catch up with you guys then. Take care.